Welcome to this edition of the MultiMillionaire Forum. Every month, we bring some interesting idea that we've researched on, some knowledge that we can share with you, with our friends, with the rest of the world, and perhaps have a little bit of opportunity to share some knowledge, exchange a few ideas, and perhaps explore what might be the opportunities coming forward. Purely educational, we don't speak in terms of any product or any recommendation. Uh, I'll have a little discussion with you. I will present my research for the next 20, 30 minutes, and then we will have an open house discussion. There we can talk about, generally speaking, everything. So while we are on air, let me begin with our presentation. It's a very interesting area that we've picked up today. And this area is, yes, I've finished the disclaimer. So yeah, we're brokers and standard stuff. So we've picked up this area today of financial services. This is, you know, one of those most favorite sectors for a lot of people, finally. What this sector actually talks about is the favorite banks that you've been invested into, the favorite companies from which you took your home loans, the favorite companies from which we took our car loans, and all those companies across our board, companies that we can swear by, companies whose management we think is super clean, companies that we believe that these are the bluest of the blue chips that you can have and you must have for years and years together. These are those companies that you just buy and forget for the rest of your life. So which is why there's so many characteristics of this sector, right? So this is a sector which, in some sense, if you might like, and jokingly, I even call it the fixed deposit sector. A lot of times, what happens is in this sector, not much is sometimes happening. Sometimes a lot is going on, and what I mean by that is, from a business point of view, there's a lot of activity going on. There are acquisitions happening. Suddenly, one bank is going and acquiring another bank, or one financial company is merging with another. So sometimes a lot of action is happening, but other times no action is happening. So which is why I jokingly call some of these, companies as fixed deposit companies. I mean, of course, they sell fixed deposits, but when we invest in these companies, we don't make more than 8 or 9%. So which is why I call them FD companies and not really the growth companies that we have known. But anyway, there is something interesting which is happening. In fact, the growth has been reasonably steady. And let me say that at the outset. So, what we are presenting is not something that you don't know, but the landscape of financial services has become extremely dynamic. It has changed dramatically in the last 5 years or so. And which is why we thought, why not share it with you? Uh, a lot of these companies, which are your favorite companies, they have not really appreciated as much. But there is a lot of activity happening. So stay till the end. There is this last slide that we've compiled for you, and I promise you this will be some jaw-dropping information at that point, right? So with that, let's come back to our presentation. Let's talk about the booming financial services sector. It's growing. Like I said, I want to say it again. This sector is growing. It is growing steadily, it is growing continuously, it is growing consistently. And the reason is pretty obvious because as a country, we are growing. As a country, our demographics are in our favor. We have so many young people joining the workforce. We have so many young people whose accounts get opened, so many young people who start having interest in the stock market and their demat accounts open. So all of that is happening, but there is a lot more than what meets the eye, which is exactly the objective of today's session, right? So let's get into it. And this is something, again, this is another reason why are we talking about this thing. I spoke about this picture in this slide a few years ago, about 3 years ago to be precise. In November 22 was the time I spoke about this thing first. And at that point of time, there was this Morgan Stanley research. So this is from Morgan Stanley research. And they said that typically, the way most of the economies are and most of the countries in the world that you see, what happens is that ordinarily what happens is you see like a triangle, you see of sorts. So there's a triangle. Right at the top of the triangle are if let's say if you're talking in terms of richest people, so you will always find maybe 1 or 2% people are right at the top of the pyramid, and that's the maximum wealth, like the Ambanis or something like that in our country. But there's a very small percentage, and then the pyramid is, or the triangle is the way the triangle is. So the base of the triangle has the maximum number of people, and then affluence moves up. So as we go along, the wealth of people, richer the people, obviously we form a triangle of sorts, right? That is typically how any economy is. But something very interesting was happening in India, and which Morgan Stanley picked up. And that's why they did that research paper in 22. Still relevant because it's relevant for the next 10 years. So let's come back to that picture again. And I want to show you exactly, once again, what they did. Now you'll be able to better appreciate that. Okay. So, like I said, typically you see a triangle. Like anywhere, this is the standard triangle that you have for any country, for any economy, for any product development. But what Morgan observed is that this triangle is changing. Now look at this. Look at this area. This is what might happen by 2031 to the households' income distribution. And they did this based on income, right? Well, I give you the example of net worth and money, but this is based on income. So they are saying that at the bottom of the pyramid, the number of people in this lowest category is going to shrink. So it was about 30 odd percent here, is going to shrink to about half. This section, the second area, is also sort of shrinking. But look at this third area. This is what we know as the urban middle class or the upwardly mobile middle class. This is expanding, which obviously means that at that level, the number of people having a larger income, a larger disposable income, and potential to save, therefore, and potential to, have luxury goods and all of that is expanding in this middle section. And that is also one of the reasons we related to our subject today. It is also one of the reasons why people will borrow more money and obviously purchase a lot more goods, including a lot of luxury goods. Interestingly to note is at the top of the pyramid here, we had 2% versus currently we have, currently in the sense this was in 22, we have about 7%. And now obviously this number has gone up. So what are we trying to here say? What is all this research basically trying to tell us is that 1/5 of the working population of the world in the next decade, or within this next 5 to 6 years, by 31 is the estimate, will be working in India. So there are so many people, and with all these people, with all the rising affluence, more savings, obviously they are going to invest. And by the way, what is also happening is the interest rate in our country is going down. So for that matter, our country or anywhere in the world, as the interest rate moves down, automatically people start looking at different and alternate avenues of investment. When they start looking at different alternate avenues of investment, what then happens is where interest sort of starts emerging into things like stock market, mutual funds, small cases. People want to try different products. And that is exactly what we saw. Where I don't know whether we should say thanks to COVID or because of COVID or unfortunately due to COVID, because from a savings point of view, from an investment growth journey point of view, it's not it's thanks to COVID. But otherwise, obviously, we know that was a period that none of us want to ever remember or encounter again in our lives, right? It is at that time a lot of people got interested, and financial services companies actually did extremely well in the succeeding few years. But that's where people got interested that, look, if there is nothing else, maybe the stock market is a great place to create wealth. So that's where the enthusiasm and interest developed. Somewhere because of this, because of digitalization, because of the policy measures of the government, now you will be amazed to see what the financial landscape is looking like. Okay, Jhaveri, bring that up. Let's look at the financial landscape. Just look at what you're going to see. Let's move forward. This is our financial services landscape today. Okay, and we have still not included everybody. And I'll tell you who we've not included. But today, for example, we have banking. Obviously, you knew about it, nothing new. You knew NBFCs also. Who are NBFCs? These are your housing finance companies. These are consumer finance companies. These are companies that basically you deposit with so that you get a little better rate of interest than the bank. And these are companies who also lend, like banks lend, even NBFCs lend, but they're just that NBFCs do not do transactional commercial banking business. Example of an NBFC is Bajaj Finance. So it's not a bank, but it does all sorts of borrowing and lending, deposit and lending activities. So, banking, obviously, ICICI Bank, HDFC Bank, State Bank of India, precisely are examples of that. NBFCs, Understood? They do not do banking, commercial banking, but they do pretty much the same borrowing and lending business. Then there is fintech. Okay. Uh, we'll talk about each one of them in detail. Okay. Some more details, some lesser details, but basically we'll cover all these 12 areas. So it's quite a treat to see what's going to happen. By the way, I must also mention, because this is financial services, uh, I'm sorry, but I'll have to throw a lot of data at you. But we'll try and make the best use of data and charts, and we'll only have you focus on the most relevant piece. So you're not confused about it, and you can appreciate the core essence of what we are speaking and what that data is trying to represent to us. Okay. So then we have broking, emergence of a lot of broking companies. So these are share broking companies. They've been around for the longest of time, but they have rediscovered themselves. They have evolved again in a very, very different format. We'll talk about that. Exchanges were always there, BS Bombay Stock Exchange and National Stock Exchange, a lot of other regional stock exchanges, but they have also reinvented themselves and they have become avenues for us to invest money now today. Correct? Then we have depositories, as you can see at number 6 here. That itself has become a massive business because depositories are not only storing your securities that we are buying on the stock exchange, they are also storing a lot of other things, unlisted shares. They're also storing private company shares, etc. There's a lot of activity there. Fund management is a massive area that, I mean, we can speak about one whole day on fund management itself, mutual funds, PMS, AIFs, etc. Wealth management is another component of this landscape. The registrar and transfer agents, people like your CAMS and Carvid, the ones that Link in Time, these are all your registrar and transfer agents. Then we have life insurance, non-life insurance and health insurance. Now, these are the 12 odd areas that we want to focus on. So each of these has opportunities within them, opportunities to invest within them, and very interesting opportunities that too. So that's something that we are going to have a glimpse of in the next 10-15 minutes. What I have excluded from here is also things like postal savings, postal deposits, senior citizens, all the bond kind of instruments, typically the ones that give you a fixed income return, government securities, corporate bonds. So we've excluded that, but that also is a very important part of a landscape. But because we are talking always from the point of view of growth, multiplying money, and where the opportunities are. So this is where the opportunities are in this financial services landscape. So let's get into the salient features of each one of them over a period of time. So this is something that we wanted to show you in terms of how is some of these private banks, how their businesses have changed. So while CASA basically is current account, saving accounts. So while in the last 5 years, there you can see there's been a little bit of growth here. In fact, little means it's almost something like 60-70% in terms of business. But look at the net income. The net income has moved up from 27,000 to 62,000. So point to note, in 5 years, the income has more than doubled, obviously because the business is also almost sort of doubling. Pretty much it's the same story with most of these things. This was a research paper done by IGCRT, and they of course try to do from a statistical point of view. But what is interesting and impressive for us is that in this private sector, banking sector, we are seeing that pretty much their incomes have doubled in the last 5 years, which is great. You see, income doubling in a great country, in a large country like India, is a very big deal. Pretty much the same thing is also happening in the public sector banks. Now, we'll show you something about the non-performing assets. This is more relevant to the public sector banks. In as much as 7 years before, and we've done a whole session on this, right? Last year, somewhere we did a session on public sector, one of the greatest stories that have unfolded in this decade. So in that, we spoke about how the government policies in their second term essentially looked at all the PSU banks. They did a merger of all the PSU banks. They asked the banks to clean up their balance sheets, make provisions, whatever loans were bad, write them off, merge a weaker bank with a stronger bank, and all that restructuring happened. Now, this is the result of that. Although this graph is looking downwards, but something for us to be very, very happy about, that in 2018, the NPAs of the banking sector was as high as 11% non-performing loans. this has almost collapsed, and which is great news, to less than 3%, and as of data available in 24. So fantastic news. What this means is banks have recovered the money. Whatever they could not recover, they have obviously written it off. And as a percentage of the total business, the NPAs has gone down dramatically, tremendously. So, which obviously gives a lot of confidence not only to domestic investors but also foreign investors, because they don't want to invest in a financial sector which is absolutely plagued with a lot of bad loans, right? Nobody wants to do that. And what happens when you have too many bad loans? Nobody wants to remember 2008, when American housing industry crashed, or housing finance sector crashed, because they had funded everybody who didn't have the capacity to repay, and pretty much a big chunk, I mean, massive percentage of loans became redundant and non-performing. So we know what that means. We don't want to have a repetition, or we don't want to ever imagine that in India. But you won't, because great news, we are under 3%. Okay, so we can see that now non-banking companies, again, too much of numbers, but look at the trajectory. Okay, I just want you to see that last 5 years, somewhere here, we were at 20 lakh crores in terms of assets, or the lending assets of NBFCs. Today they are standing at more than double. So great growth. Now you might think, why am I showing you this? Just to tell you that everything is great within this sector. Everything is absolutely fine. Something has changed recently, and which has triggered a lot of investing interest into this area. Otherwise, everything's fine. The growth rate is good. Assets under management have been growing anywhere from 26 to almost 40% recently. Everything is good. But just stay with me. Let's go through each of these different pieces of the landscape, and you'll see what's happening. More. Now, here's something very, very interesting. Okay. I mean, this is massive, right? Look at the growth opportunity of this thing, 17% and some 95 billion US dollar market in the next 5 years. What is this? This is the fintech market. Okay. What is fintech? Okay. For the ones who are not very clear about it. So today we have companies that we can go to their websites, we can go into their apps, and we can compare which insurance policy to buy, which is a good credit card to have, which is a good loan to take, which is the best or the cheapest loan to have, so on and so forth. These are known as fintech companies. Companies that are also facilitating, payments for you. One point of time, it was only our banks which you could use for making bill payments like electricity and entertainment and other things. Today, there are multiple platforms that are available for you to do that. So all that is fintech, short form for financial technology. Not that company financial technology, that was a bad episode in India, but these are financial technologically intensive companies, platforms essentially. Robotic platforms pretty much work on its own. And by the way, I don't know if I keep mentioning, this is a lovely statistic which I read somewhere. 50% of the global transactions that are done online are done in India. 50% of the global transactions happen in India, thanks to our fintech, thanks to UPI. So imagine the companies that are involved here and the funds that buy these companies. Can you imagine the massive opportunity? Okay, and not only that, today we are not only talking in terms of our strength of fintech. These fintech companies are going international. We are going and saying that we will do UPI in Singapore. UPI will get accepted in other parts of the world. Not only that, we will also help other countries develop their payment systems, their financial platforms, and so on and so forth. So, the growth in this area could be explosive, and we will only know that in years to come. We'll watch this space. Okay, right now, limited data, but as we move on, we'll watch this space. Okay, let's move to the next one. The next one, I think, is okay. This is just showing. What is this showing us? This is showing okay, fintech. By the way, 70% is all happening on the mobile phone. So I think we should all watch. The other day we were talking, and somebody complained that their thumb was paining, and the physiotherapist said that maybe your tendon has got a little damaged, but that's because you're using too much of the phone. All the time we are doing something on the phone, but that's the negative part. But basically, fintech is all happening 70% on this platform of mobile applications. All right, look at broking. Now, this is a very interesting area. See, broking, traditionally has been a situation where you used to imagine an office with a lot of people, and investors would go to a broker's office, and it would be like on a good day it would be like a party, on a bad day it would be all sad and gloom. But now these broking companies have changed. I mean, they have rediscovered themselves. Uh, and the kind of growth that has happened in the last 5 years is unbelievable. I mean, for example, these are some examples, especially these are examples of these broking companies who are digital and fully online. So, for example, if you take the Zerodha, one of the leading examples, and Zerodha is actually this uh, purple column, you see. So Zerodha had so many active clients, but less than 50 lakhs, so it's somewhere here. So let's say this was about 40 lakhs, and this is the year 21. By the year 25, this has just imagine, from 40 lakhs to almost, what is this, 115, 14 million. It's a 1.4 crores. This is where it has gone. So it is kind of, you know, become 3x. Now, similar is the story with who's this other one? This is Grow, by the way. Grow is another very popular app. Angel One is a traditional old broker, but they have reinvented themselves, and a lot of broking companies have pretty much done the same thing. Upstocks, of course, is a new modern broker, also with great growth, but not as much as Zerodha and Grow. Grow has really grown like leaps and bounds, and I think every young person in today's world knows Grow. Maybe you don't know, but your kids know about Grow. Maybe they have Grow in their phones. I mean, you'll be surprised. And it's a very, very smart app and does a lot of good stuff. So worth checking it out. Just by the way, today Grow is really leading. Number of active clients, 13.02 million. So many clients. So, by the way, 1 crore is 10 million. So basically, if you see 13 million, and what it means is 1.30 crores. 1.3 crore accounts, active clients. 1.3 crores. Why am I repeating it again and again? Our population in the country is how much? No, population is 140. But the thing is, we have it's still just 1%, by the way. So with so many people getting interested, and remember that triangle that I showed you, that initially the triangle is changing into almost like a diamond, where the middle class is really expanding right in the middle, plus the affluent category is expanding. So just imagine, maybe the game has just about started. Maybe the party is just begun. This has all happened in the last 5 years, where the growth has tripled. And imagine the next 5 years, in the next 5 years thereafter, how much growth is likely to be there for these kind of companies. And not everybody is listed here, but these are at least the top 10 for you to see. So these are stockbrokers. So along with stockbrokers, what also is very interesting is, the exchange, because now stockbrokers obviously will provide you the opportunity to go on the stock market and buy things. Look at the jump in the last 10 years. I mean, this is again almost what 40,000 has become. This turnover volume has gone up 7 times. 42 lakh crores to 280 lakh crores. I mean, it's difficult to even pronounce these numbers. It's humongous. The total turnover was 168 lakh crores. Now it's become almost 900 lakh crores from here to here. A lot of numbers, but again, just for you to understand, this is also almost 6x. Sorry, how much is this? 1.7 to 9. So yeah, 160, 170 to about 900, 17 fives are 85. So this is almost 5.5x, right? This is the kind of growth we are seeing. And by the way, not only the delivery market, this is what we understand traditionally, okay? This is delivery. But there are people who are doing index futures, stock futures, options. The volumes there are also humongous. But now all these volumes mean what? I mean, how does it translate into an opportunity for us? Volumes means there is more brokerage that the exchange will earn. Excuse me. More brokerage, meaning what happens is their revenues go up. Automatically, if we are invested, then our shareholder value moves up, because the revenue for the broker, for the broking company, the revenue for the exchange moves up, their profits go up. As a shareholder, you have a direct benefit to have in that space. Let's go forward. So What's the next area? So we spoke about brokers, we spoke about exchange. Obviously, the third leg to the whole, operation is depositories. Now you can't operate in India without, you cannot have physical shares, right? So we all have to obviously operate through a depository. Look at the growth of depositories. In 2019, this is very interesting. Okay, 2019, it says we had about 3.5 crore accounts. 3.5, I'm not sure if you can read the number, but this has grown to this fellow. Almost, let's say four, I mean, we just round off simply for sake of argument, from 4 crore to 20 crores, 5 times the number of demat accounts have multiplied. And obviously, this is the growth rate, but not so important. But this is something to be very, very, something to take note of. So depositories are doing great business. Depositories are moving. If some of you have invested in depositories, then you know the kind of growth that you've had in depositories. Now, for a minute, just do me a favor. Go back to the landscape. So, so people don't forget, or, we don't lose track of where we are. No, just go back in the presentation. Just go back to the landscape area. I just wanted to come back in the presentation. Let's just go to the landscape and quickly kind of refresh where we were standing in the landscape before we move forward. We completed 6 areas so far. Okay, and we are going really fast. We are briefly touching upon it because of the limited time, and there's so much that we want to speak of. And we also want to have a little discussion later on, right? So look at this. We've spoken about NBFCs, fintechs, broking, exchange, and depositories. So now, if you see that these three are kind of interlinked to each other, right? Broker provides us facilities to buy and sell. Whatever we buy, it will happen through the exchange. Whatever we get from the exchange, obviously, we are going to get shares and units, etc. That units will park themselves into depositories for us. The exchange will, the banking system will give money to the exchange. Exchange will give, the units or the shares to us in our depositories and things like that. And then fintechs are also kind of enabling broking to happen. So it's like quite a interesting maze of sorts, right? So anyway, we've spoken about these 6 areas. So now, just to give you a sense, we came back to this slide. We're going to talk about other side of it, okay? So this is all, if you like, the infrastructure. This, if I were to draw a line in the middle, this is all the financial infrastructure. See, bank is an infrastructure. Broking company is an infrastructure. Exchange, depository, these are all, entities or verticals that you want, without which you can't really operate, right? So these are institutions that have created this financial infrastructure for us. Now, on this side, this part is the users of that infrastructure, okay? So in that sense, we are now going to speak about fund management. So quickly come down to the fund management area. Okay, so let's talk about fund management. Now, in fund management, essentially, what is fund management? In fund management, there are 4 very, very important sections right now today. What you are very well versed with is probably two of them. One is mutual funds, because these are manufacturers of products, right? So in very simple terms, we call them manufacturers. Mutual fund is one of the largest manufacturer of products, which you are all aware of. Many of you invested also. So mutual fund is one. The other manufacturer of a product is obviously your portfolio management service, PMS as we call it. Again, something that a lot of you are aware of. But there are some more, such manufacturing licensing or manufacturers that have emerged in the last few years, and they have had a fabulous growth. So that is, one of them is called AIF, Alternative Investment Fund. Very interesting. Now, alternate AIFs are available for domestic Indians as well as international investors. And international investors would invest through the GIFT City. There's domestic investors, we would directly invest the way we are investing in a mutual fund or a PMS. But what might be the main difference between that is, so mutual fund, pretty much you can invest even as low as 500 rupees. In PMS, you know that the minimum is 50 lakh rupees. In AIF, normally it is 1 crore. That's the minimum. And then there are company minimums also. So somebody would want a 3 crore in their AIF. Somebody might want a 1 crore in their PMS, so on and so forth. But companies have their own minimums. but there are regulatory minimums also that we must understand. A new species that has emerged on the horizon is small cases. And at the last count, there were more than about 80 companies. These are like mutual funds, but they are a little bit of a cross between a mutual fund and a PMS. So what happens in a mutual fund is you have units, right? And what happens in a PMS is that you have shares in your demat account. So here what happens is a small case is somebody who's creating a basket of stocks. So like mutual fund, they are giving you good professional advice. They are creating a portfolio for you, which you will through technology buy into your own demat account. Okay. But the difference is there you don't have units, but you have the same kind of research and professionalism of a mutual fund. And you have the growth of a stock into your account. The growth of a stock is normally supposed to be more than the growth of a fund. So that's the combination. So there are about 80 plus companies with, take an average of about 5 products per company. You have another 400 products there. So there is a massive explosion of product suppliers there also. Now, not in fact, pretty much none of them are listed at the moment. Mutual funds, of course, you have listed players. You also have some PMSs which are under mutual funds and they are also listed. But AIFs, some of them might be listed. Small cases, most of them are not listed. So look at the opportunity there. Come back to the presentation and let's look at the growth that has happened there. See, growth in that is directly proportional to the growth that you will see happening directly in your portfolio if your portfolio has invested into one or many of these companies. Okay, so if you look at March 21 figure, for this is for mutual fund, and I'm showing you growth of all these verticals, right? So mutual fund, you can see that mutual fund was at almost 30 lakh crores in 21. Today in March 25, this, I mean, which is like literally what, 1, 2, 3, 4 years time. In fact, 5 years time, I should say. I should probably compare from 20 to here. 20 lakh crores here, approximately to 65 lakh crores there. This is more than 3x times. Thanks to SIPs, thanks to great mutual fund products, thanks to all the investors whose interest is solid to invest in mutual fund, and also thanks to the fabulous returns that the mutual fund is giving, along with the diversity of products, the kind of fantastic returns that mutual funds is delivering. So 3 times in terms of the growth of their assets. This is directly, see, please understand. Let me share a little secret about mutual funds with you. See, mutual funds, what they do is, whether it's a mutual fund or a PMS or any financial company, they typically charge you a recurring fee. So a mutual fund is charging you a fee anywhere today in the range of 1% to say 2.5%. Let's take a very broad range. Okay, smaller the fund, higher the charge. Larger the fund, smaller the charge. Okay, but still the range is somewhere very approximately, I'm saying, from 1 to 2.5%. So if the assets of the mutual fund are growing, they are charging the same, let's say 1.5% on an increasing asset base. So on 5 lakh crore, 10 lakh crore, 15, 20, 30, 40, the charge is still 1.5%, which is what you and I and all of us are paying, right? So imagine the charge is happening. So market is moving up, plus there is new money getting invested, and the charge is a percentage which is being levied on all of this. So some of the companies that you already know of have done some fabulous returns in the last couple of months, the last few years, but they are creating huge investment opportunities. These were not available earlier, but they are available today. The same applies for PMS also. The same applies for AIF also. We'll quickly see those numbers as well. Okay, so this is mutual fund. Oh, by the way, this is SIP contributions, a figure that everybody loves to talk about. So, and this is the annual contribution. So 43, you see, by the way, this is also one of those reasons, why a lot of us think why the markets don't go down, because so many of us retail participants are doing a systematic and disciplined kind of investment. So almost the number is touching 3 lakh crores. 3 lakh crores is almost what, 25, 26,000 crores a month. That is how much the retail investor of India, people who are investing between 500 rupees and the average is about, I think, 5 to 6,000. Of course, many of you might be doing SIPs of 50,000, 1 lakh and 2 lakh also, but this is average across India. So that's the average. So that means it's really the person at the bottom of the pyramid who also believes that SIP is a great idea, and they are doing this. And as a result of which, institutions are always flushed with money. Institutions meaning mutual funds, domestic institutions, insurance companies, they're flush with funds. They always have funds to buy. So no matter what happens in the market, if it comes down 5%, there is like a big chunk of money, truckload of money that has to be invested, continuously happening month after month. How will the market fall? Okay. Okay, this is some growth numbers for PMS. PMS has moved from 12 crores to 33 crores, as you can see. And AIF AUMs have moved from 3 crores to 9. I mean, this is, of course, lakh crores. Yeah. I mean, everything is always in lakh crore because it's not 3 crores, it's 3.4 lakh crores. And now it is 3 times, 9.5 lakh crores. So in 5 years, this industry is moving up at the speed of 3x. It's tripling in 5 years. Guess what the growth rate of this company is. I mean, the growth rate it's humongous. It's more than 25-30%. That's the growth rate of each of these businesses. And that's the growth rate of how much people are earning and what they are saving and they are investing this. That's how AUM is, assets under management, just for the sake of clarity for people who may not know. This is the kind of growth happening in this area. Okay, really something to take note of. I mean, it's just not the traditional banks that you have. Banks also today sell a lot of these products, by the way, because banks sell this product, they also earn a commission or a brokerage income in addition to their in addition to their borrowing and lending business. They are earning a commission also. So, everybody's making a lot of money in the financial services sector. Why shouldn't you and I? So that's the logic. Okay. This is the wealth management industry. This is the kind of industry that all of us are a part of. Brokers, mutual fund distributors who are basically helping people to choose a good product, curating products, bringing solutions, and therefore doing this. But this is something that we found from Nuama. Nuama is previously it was known as Edelweiss. They changed their name, and Prudent is another corporate very large format corporate broker, distributor of products. When I say broker, means not share broker, distributor of product, but they do share broking also. But having said that, just for sake of understanding, the kind of growth that is happening here in terms of assets that these guys manage, the leading brokers. I mean, this is only one broker, by the way, from 19,000 crores to 1 lakh plus crores. In how much time? So from 19,000 to this thing, 5x in 5 years. Look at the kind of growth. And this kind of growth is obviously only happening because, I mean, a lot of people are doing some very, very smart investments. And that's how this industry of wealth management is also growing leaps and bounds. Let's move forward. There is just no end to data. So who's going to take care of all the record keeping now? Somebody has to keep records now. If there is mutual fund, stock market, somebody has to keep records. Who will give you a statement and who will give you your capital gain statement and records of what transactions you did, what SIP you did. A lot of people ask, give me my last 1 year statement, last 6 months statement, give me a comparison, etc., so on and so forth. So this is the guys who do it, registrar and transfer agents. Their business in terms of folios is account numbers that investors have, right? So if you are invested, let's say in 3 mutual funds, you'll have 3 folio numbers, just as an example. Okay. So folio number in lakh. So this is 900 lakhs was the number of folios in March of 20. As on March 25, this number has more than sort of gone up to 0.5 times, 2.5x. So today there is 2,345 lakh folios. So the companies who are operating here, for each folio, for each statement generated, for every little service they give, there is a tiny charge. It could be 1 rupee, 2 rupees, 5 rupees, 10 rupees, small charge. But the amount of voluminous transactions that happen make even this type of players a very, very good investment opportunity times to come. So that's RTA for you. Now, moving to life insurance. Now, what is happening with life insurance, non-life, and health? And I'm going to combine all 3 of them together. Is that a lot of data is not very easily available. So we've gone to IRDA, we found some data, but a lot of data is estimates. So I didn't want to talk about that. Plus, insurance being insurance, it has really the merit of being taken as a standalone subject of discussion. But just for the sake of completeness, I wanted to say that this is new business premium. This is the revenue for the life insurance company. And that revenue in the last, 5 years has not gone up. I mean, 5 years is not great. 5 years is like from 2.5 lakhs to 3 lakhs. So it's about 20-30% growth. 10 years is a more significant and a more respectable number. From 1.5, they've kind of doubled. But listen, it's life insurance, right? Not everybody's buying life insurance. But what life insurance does very interestingly is that these days, life insurance is not selling so much of traditional. There's a lot of unit-linked products that get sold. There are a lot of different varieties of products that get sold. So it becomes very, very profitable for them because they're going to have an annual charge that will happen on those policies. And in the next 5 years, 10 years, 15 years, you'll see massive growth and massive balance sheets and massive revenue numbers happening for these insurance companies. They've built the base. They've already sold all those policies. And the tax-free factor was like a great motivator of sorts, which is not there so much now. But insurance will always remain the way it was. These insurance companies, by the way, also are very big buyers. They are very big domestic institutions. They're very big buyers in the stock market also. So again, in times of a situation where the market is falling, it is these institutions who come forward also and do a lot of buying. LIC is known to be one of the biggest buyers, and they almost have stakes in terms of percentages in many companies. So therefore, the markets again become very, very resilient because of them. So very quickly, similar, in non-life and health, but we don't want to speak so much about it. Let's move forward. What we want to really talk about now, here's a very interesting thing, okay? What I mentioned in the beginning, something very interesting is happening in our market. See, note this thing. This is the interest rate movement of India. Simple rule. Whenever interest rates start moving down, the market starts moving up. Bas, very simple. And one of the key beneficiaries of interest rate movements obviously is financial company. So you may think that interest rate going down is going to reduce the profitability of the financial sector. Yes, the answer is absolutely right. That could also happen. That until yesterday they were earning say 8%, now they're going to earn 7%. But what happens is when the interest rates go down, all the people who are borrowing money or who are borrowers to the banking system will want to borrow more because their affordability goes up. They have to pay the same EMI and they get a larger loan, or for the same loan, they have to pay a smaller EMI. So what happens is more money comes into the system, more growth happens, right from a very ordinary person, retail level, maybe he wants to buy a scooter or maybe buy a house, to a corporate who wants to establish a new factory or a new industry. Everybody has access to cheaper funds, and that actually changes the whole dynamics. So when you see that the interest rate is rising, the market is normally falling, and when the markets are, when the interest rates are falling, the markets are obviously rising. So that's the kind of a relationship that you have between markets. It's not precise, it's not exact, but broadly, this is what happens. Just something to remember. Now, what has happened here is interest rate downward cycle has just begun. And because of this downward cycle that has begun, there is something very interesting which is already taking shape in this financial sector. And that's what I told you right at the beginning. We'll show you the growth. I mean, you'll be amazed with this. Let's look at that slide. Okay. Let's come to that slide first. The growth slide. The last one. Because we're running out of time also. So the way to take advantage of this whole thing, while Jhaveri puts up the slide, is there are only two major ways of taking advantage. One is, of course, or rather three, I should say. One is obviously you buy funds, mutual funds that invest in these financial sector. There are some new ETFs that have emerged, which you can buy from the stock market. Pretty much they work like a fund only, but it's ETF, little cheaper, more efficient, smarter, that kind of a thing. The third way is obviously you can buy shares into these companies, of course, after studying their balance sheet and all of that. And then these are the broad three, general methods in which anyone would make investments here. But now this is interesting. Now this is what I wanted to show you. What has happened? See, the thing is, people take note of things when it is when something moves up by 70, 80, 100%, then the media starts talking about it, television, newspapers, everywhere you hear about it. Okay. But when so much of action is already happening and everything pretty much has happened in the last 3 months, look at this last 3 months. Broking average growth of companies has been 40%, fintech 25, depositories last 3 months 25%. But just look at it, wealth management companies 25%. All in the last 3 months, huh? April, May, June. So this has been one of the leading growth sectors for the last 3 months. So 3 months, we've identified so many of these players have all moved up anywhere in the range of 20 to 25%, and only in 3 months. Can you imagine what an opportunity this might be? And by the way, what's also happened is that in the last so many years, like I said, your favorite banks, they have not really given you that kind of return. This is maybe their time to catch up. Okay, so maybe in the next couple of years, the growth was already there. See, the trajectory was like that, but the stock price was just moving flattish. So now it'll probably catch up, right? The stock price is normally a little ahead of the fundamentals always, right? I mean, both ways, in positive also and negative also. Fundamentals are going down slowly, the stock price moves up, moves down quickly. Both the things happen, but they might play a little bit of a catch up. But that's only one area of financial services that we understand, which is banking. But I've shown you 11 more areas which are huge and power packed with opportunities. And basically, the way to take advantage of this is just to one is either buy the ETF or buy the fund. Now, of course, we'll come to you with recommendations of all of that. But with that, what I want to do is I want to close this session here.